understanding the subject. Go ahead, please. Next, it gives me great pleasure to invite Prakash Iyengar. He has been in the Gulf region in Saudi Arabia and in UAE for considerable long number of years. Currently, he is Associate Director, Finance and Administration and CFO with a reputed retail group here, large group in Dubai. Chartered and a cost accountant. He has worked with Tyco Electronics, a US defense and multinational, before relocating to Dubai. And he oversees finance, IT, risk, HR administration, and facility management with large groups. So he has experience across various sectors. May I again invite Prakash to join the panel, and may I invite Vipul Kothari to take over from here and to moderate the subject. Thank you.
Good evening, everyone. Am I audible?
Yeah.
Good evening, everyone. Thank you, all the panelists, Rohit, Prakash, Mr. and Tirupati, for accepting our invitation to deliberate on this very important topic in current turbulent times. We'll start with the broader perspective on the macroeconomic level of the UAE economy, and then go down to the banking and finance field. Because what I believe is primarily the economic situation is directly impacting the cash flow management and the financing situation. In the times to come, probably we'll say what further challenges actually would remain. Now, as we have seen, 2015, especially the second quarter, has been very slow, and that slowdown in the economy is expected to continue probably in 2016 as well. Oil, which was at a peak and has come down less than 30, and I don't know, it's always when it's sliding, the research report always talks of further slide down. When it's going up, they always talk of going up, the rates going up. And the rates currently, they say, probably could even touch 20. And I was just looking at and doing some research on what the situation was in 2008-9 when the markets also crashed. Though probably at that point in time it was more of a financial crisis which effectively brought a downturn. But at that point in time also probably oil went to probably in 30s, late 30s. And the GDP in that particular year, 2008-9, the country witnessed a negative growth of 5.2%. With the oil being now at probably 30 and going down, probably it went up few, dollars at the closing on Thursday or Friday. But still, expectation is that oil might still remain at a level of 20 to 30 range for a considerable period of time. And considering that other fact that generally it is said that the economic cycle, it takes a turn every 7 years, 8 years, and 2008-9 we are probably at a 6-7 year, we are on the threshold of that, another downturn or so. I would start with Rohit. What is the bank's view or your view on the economic scenario and what can we expect in 2016?
Thank you, Warren. Also, quite surprised that banks are such a hot topic of discussion. And like I said, I speak for myself. I'm not a spokesperson for the bank today. And I can share banks with separately. So I think the economic situation, this cycle is actually much shorter than this time. Because the cycle lasted from 2008, it actually hit us by the end of 2008. And it actually lasted till about 2011 or so. So from that perspective, it's only
Voice is not coming clear.
So I was saying that the
Yeah.
audible now?
Yeah.
Yes. So The economic cycle, actually, the downturn lasted till about 2011. So from that perspective, that cycle is getting shorter. And it's not 7 years anymore, it's probably much lesser. There are 3 or 4 factors which have contributed, and there's no real science available as to why this has happened. But currency fluctuation is one of them. Right? So, what are the main factors for UAE? Like tourism, and the Russian ruble is crashed dramatically. Most of the African currencies are actually pegged against the euro, right? And from a dollar perspective, they've lost a considerable amount of value. Right? Sentimentally, all the asset classes have actually come down substantially. Be it gold, be it property within UAE, be it the stock market. So there's no asset class which is coming through. The third thing is obviously oil, right? So that's obviously contributing sentimentally to a lot of investment not happening, right? And unless and until, property is, again, there is no contracting activity which is getting generated from private segment. So it's a mix of 4-5 things which has contributed. Unlike 2008, where it was more global driven, it was more property in the US, it was mortgage-backed securities which started coming down, got into a financial crisis, etc. So I think if you look at other emerging market countries, it's more related to currency, right? But there's no fundamental issue with the Indian economy, for example, right? But this is more UAE centric, and the reason that the last thing is obviously the whole geopolitical situation. So the country is actually, UAE is actually technically at war with at least one country directly. So there is that whole investment of the government which is not getting plowed back. When we talk about liquidity, there is a large amount of government deposit from some of the state banks which has gone out of the system. Right? So there is a whole host of issues which is contributing to one situation.
Thank you. From that, I would like to go and ask Prakash that the current situation being tough, where we say that it's not just oil, it's real estate, construction, and probably all the other sectors. From a corporate perspective, what do you see in 2016 happening, and do you see that Iran probably opening up, will it really give any benefit or advantage to Dubai? Because that is one lifeline which everyone is actually looking at, that probably could take again the business sentiment into positive and help businesses grow.
Hi everyone. I think the way to ask for 2 questions, the way I see
Mike.
the way we see 201 is it's going to be difficult here. In all fairness, I think the slowdown started sometime in the second quarter of 2011. I work with the retail group, so we have seen retail considerably slowing down from March, April. Last time the Dubai shopping festival was not what it was expected to be. So the expectations now for 60 is that it's going to be challenging. Probably things are going to get a little worse before we start seeing improvements. Our internal forecast is that till the second half of 2017, things will just slide. Now, coming to the second question on Iran, I think there's a lot of hope that distribution companies had when Iran opens up. Iran has now opened for business. I think there will be a short-term spike in terms of terminal stock that is sitting in UAE, which could perhaps be sold to the Iranians. Now, the Iranians, I think, are extremely smart, and they have made the arrangements to go directly, cutting out all the intermediates in UAE. That's what we think that can happen. And if that were to happen, I think there would be a short-term boost to businesses here. They could get rid of the terminal stock, hopefully collect the cash, and start trying to repay the banks. That's what we the internal assessment that we have made on Iran.
Thank you. Essentially, one thing, going from this, you deal with various corporates, even SMEs also. Which are the sectors which have actually taken the most hit in 2015, and which are the sectors which are still okay and where they are able to manage their business as well as the cash flow.
In terms of sectors, if you see, just before that, I would like to point out one thing, and that's probably relevant to the sectors as well. As part of SME 100, Dubai SME 100, we get quarterly updates on the Expo 2020 projects because we're talking about the macroeconomic situation, and I think Rohit summed it up pretty well. But just to share with you a few facts that when we look at those quarterly updates, they send us the whole list of projects that are available for bidding and what you can do with those and stuff like that. So we see a lot of progress happening in terms of projects moving from design stage to tender stage to bidding stage and stuff like that. So of course we have the oil prices where they are and the situation that we have on hand. But the government is consciously moving forward with those projects. That's what we see. Of course, we are not a contracting company or something that I would be able to tell you where the construction has started or the government is paying for it. But at least we see progress in terms of the intention from the government to move ahead with the projects. In fact, the last quarter report says that more projects have been added in terms of the site and at the expo site as well. So just to give a perspective of what we feel could be coming in 2017 in terms of economic activity. In terms of sectors, as again Rohit and you also in the beginning said, commodity driven is what has taken the largest beating, and it will, and all of us have seen the impact. So whether it was the oil and gas related trading companies, it was the rice and sugar driven commodities or the metal driven commodities which have taken the hit in terms of unhedged stock positions and the price impact. Of course, there were various other factors. I'm not talking about why the skips or defaults happened in the market, but in terms of sectors, yes, I think it was predominantly driven by commodity prices. Those are the sectors which have been.
Thank you. I think we'll now move on to the banking sector. Now, as the economy, obviously the slowdown reflects. If you see the banking statistics and the overall ability of the bank to lend the money is derived from the deposit base that it really has and the money supply which is there in the economy. Now, again, the UAE Central Bank statistics itself says that the growth of the total money supply in the economy was highest in the year 2013 and 2014. I mean, in 2014, the growth was almost 9.2%, the total money supply. Obviously, it translates partly into deposits with the bank and partly into other assets. 2011, of course, was the bad year where there was a stagnant deposits or stagnant money supply. But 2013 and 14 were good. 2015, it has slowed down from roughly 9.2% to 2.4%, the money supply growth. And going forward, I think 2016, as I think Rohit also said, that a lot of funds, withdrawals are there, sovereign funds or government surplus deposits probably go out of the banking system in order to meet their budgetary requirements or budgetary constraints. So 2016 probably the growth in money supply may not be there. This would have a direct impact on the bank's ability to lend the money. So, Rohit, what I would like to ask is that current position of the banks in terms of the deposit that it has and its ability to lend in the market, would it be able to lend further or would it actually contract the lending in order to meet your deposit lending ratios?
See, I think the asset liability ratio is not really made or impacted too much by lending on the SME side. Right, because SME lending is about 4% of the entire lending. Right, it's the large government stroke corporate lending which really affects the ratios. That's one. Second is that because the currency is pegged, it's also a natural hedge against devaluation. So a lot of money is still here. You see, there's no real flight of money which is happening within the UAE. Right, because if you're in dirhams, you're actually in dollars. And as the dollar is going up, more and more people are holding the money back in the delivery. Right? And also allude back to what was being said earlier. There is one difference between this crisis and the last one. which is that the silver lining is that the government is still not stopping the projects. So what I alluded to was that the private projects are not taking off as vigorously as they were earlier. In 2008 and 9, even government projects were impacted. But this time, the infrastructure spending, the Expo 2020, there is no letting up in the project. If anything, they are going ahead, right? Which was not the case last time, right? So, for example, if you look at the metro project was impacted and delayed last time, right? But this time, the projects are going. The other thing is, you mentioned that the economy contracted the last time. So there is some respite this time, which is that if you see on the personal lending, there is a debt service ratio that the banks have to follow, which was mandated by the central bank. So if you want a personal loan or a credit card, right, there is a debt service ratio which is taken into account. That's actually helped because the price is not really in the personal space as yet, right? And hopefully it doesn't spread there. But unlike the last time, personal borrowing is not that rampant as it was the last time, right? But there's one thing which is happening, which is the credit bureau, right? And that's taking shape in a big way. And that's also impacting lending as we speak, especially for smaller companies, etc. But to answer your question, I don't think asset liability ratio is really going to be an issue for SME or even mid-sized corporates per se.
So as long as they are credit good, banks will still continue to lend the SMEs.
Absolutely.
Listen, I think you deal with obviously a lot of SMEs, and the credit bureau, as you say, that is coming into shape now. Is multiple banking, where we've seen in this part of the world, it's very easy for corporates or SMEs to approach multiple banks and probably not share the other information with the other banks, one bank's information with the second or the third one. Is this going to be impacted, and what will be the impact on the companies with this credit bureau?
I think, and Rohit can add on to this from the bank's perspective, but yes, the Indian Credit Bureau, which is already operational in a few banks, if I'm not mistaken, brings a lot of transparency, including your individual credit report and the company's credit report as well. So on both fronts, the Credit Bureau is a very vital tool. What we have seen in the past 6 months is in some of the defaults that have occurred, the lack of transparency in terms of borrowing from DIFC-based banks and UAE central bank regulated financial institutions. That's been a major factor, and I have been speaking to the head of credits and CROs of a few banks here, and it is a matter of concern because just to give you an example without taking any names, a client who defaulted had actually his central bank report showed 9 banks, but on his balance sheet there were at least 14 banks. So the reason was not that the central bank's report was wrong. The central bank's report was absolutely right, but then he had access from the IFC-based financial institutions which are not linked to the CBR. So that is an issue. That is an issue which has been raised by the IFC as a regulator, and the banks are raising these concerns also at various forums. Mashrik is very active in the UAE Banking Association about 2 ago, and this has been raised in that forum as well. And that transparency is required. But yes, apart from that, the Etihad Credit Bureau is a very, very important step in the right direction. But that transparency is still lacking between the DIFC as a regulator and the central bank as a regulator.
I think again, let's talk about onshore because that affects, let's say, 95% of the business. The information in Al Credit Bureau is about 90-95% accurate now. Right? So, anybody who's got any borrowing, banks have to mandatorily report that. So, it's not a question of whether you will report or not. You have to mandatorily report that. So, it's only a question of time, whether your information is, let's say, 1 quarter old, or it's 1 month old, or it's 1 week old. But banks have to, by law, report all information to the bureau. So, that takes care of the source data, right? And that went online about 2nd quarter of last year. So, the information is already there. Second bit is whether the banks are using that information in taking their credit decision. I think about 70-80% of the banks are, especially in the stress scenario. Right? So most banks are using that information. And in fact, every month it's getting more and more relevant. So it's not something which is going to go away because it's becoming a part of the system, which is actually good for the economy and it is good for.
Genuine part.
It's good for everyone. One more thing I'd like to say is that on an individual side, even your utilities will come under the zero, which means that you delay your phone bill, if you delay your electricity bill, even that will affect your credit rating in times to come. So it is something which is coming, which has actually come.
Well, fine-tuned and streamlined. Because what Rohit says is that banks have the appetite for lending to SMEs and they will not impact or they will not curtail. We've seen it in reality that our SME is still getting the funding. They have the need to and they have good business plan.
In reality, I think it's very uphill task because in the current market, for the banks to lend, they are very, choosy. They are doing their due diligence, and people are finding it very difficult to get the appraisals done to get the lending. But yes, for good client, having the security, having the collateral, banks are willing to take and lend. Quality is a collateral bank, funding. This is what we are seeing in the market. And maybe when I do it in terms of whether they are lending, balance sheet lending in the current scenario, or they are more aggressive towards collateral back lending.
See, I can speak for my bank, which is open for lending and it's open for unsecured lending as well. But I'd like to ask you 2-3 questions. And these are things that one should ponder upon. When I came here in 2008, it's a personal story, and I was looking for accommodation. Everybody told me, why are you sort of looking for a place to rent? Just buy a villa and move into it. And I had come from Bombay in 2008, and a good sense of prevail, I simply didn't buy any property that time. But I noticed that people who had, 50,000 of income were buying villas which were 4 million, 5 million. And it was 95%, 98%, 110% leverage, and they were buying. And then this whole cycle started, and they started blaming the banks. Right now, the banker didn't come and tell you that forget, common sense, don't. Maybe your advisor told you, I don't know who told you, but if you don't have capacity to pay, why would you borrow? And it's a very simple question, right? All of us were not born here. Many of us came here from India. In India, if you want to get, let's say, 5 crore from a bank, they will ask you 10,000 questions and they will ask you for a lot of property. Your auditor will ask you many questions, right? So, why don't you get auditors who ask you questions here? And why don't you listen to them if they tell you? Because you are paying them to look out for your interest. And if you don't want to listen to them, why are you paying them? So that's the first thing. That it's not the banks who's telling you not to have a good auditor. Right? Your auditor is your safety. It's not bank safety. So if your balance sheet is cooked, right? And then later on you come and say, look, my cash flow was cooked. How will I pay your debt? I don't know who's to blame. It's certainly not the banker, right? Because banking is done in good faith. The way you expect as a client. And look, I'm also a client of a bank that I told you I have bank accounts up there. I come from a business family. But when we take debt, whose responsibility is it to pay the debt? It's ours. So we should be careful in what we borrow, right? And all the big companies and businessmen who've been very illustrious, such as the one sitting here, said that they have zero debt. So they will probably have bankers calling on them every week, but they will not take money unless they need it, right? So these are some of the questions that one should think about. The other thing is, who likes a conservative banker? So I get multiple calls every day where clients complain saying, change my RM. Why? He's asking too many questions. He is not increasing my line. Right? He is telling me that, I should not take this debt. I need the money. He's telling me this project is not good. Payment terms are huge, he to tell it. So, just think about these things. If you're not willing to hire a good auditor, if you're not willing to listen to a good auditor whom you're paying, if you're not willing to have a good RM who's asking you these uncomfortable questions, if your financial advisor is not telling you, because a lot of you have financial advisors, right? Who will tell you, I will get you 1 bank, 5 banks, 10 banks. They will take whatever you pay them. But are they with you when all of this problem is happening? So these are things that everybody should and need to think about. Because ultimately, bank is not going to leave their money. That's for sure. However, if the client has a genuine difficulty, if there is a problem that they are facing, most banks have a mechanism, and through the UAE Banking Federation, there are various committees. There is an SME committee, commercial committee, etc. We all agreed that there is a joint lender mechanism which is active. So, should the client get into a difficulty, there is a hearing which is held immediately. There is a standstill agreement to be done, right? But good intention is the key. Good intention and willingness to pay is
But actually, I'll come to you now from the corporate perspective with the current scenario where obviously there are challenges and obviously cash flow management would be one of the challenges. Do you find that UAE banks are actually supporting in these times? And also another second question to that is that do you actually look at the international banks as a saying that there are other options? International banks like based out of the NFC or overseas, do they actually really support and lend to corporates? Maybe SMEs and maybe difficult, but corporates like yours, which is highly diversified, do they really support?
What we are trying to do is, Mr. mentioned that one shouldn't have too many banks. Our philosophy has been to go with a combination of a couple of international banks and some local banks, because I think that's the mix that one needs to have. When we do overseas import, when we import from countries like China and Europe, I think some of the suppliers insist that they would deal with multinational banks, like Citibank, Standard Chartered, things. So that's one area. Third, fourth LCs and all that, they are a lot more willing, as Mr. mentioned. So what we try to do is we talk to 4 or 5 banks, keeping the size of a business in mind, and make sure that our facilities are kept to the optimum. We talk to everyone on a very regular basis, keeping them informed of what's happening. Every quarter we send them a quarterly report, giving all details of our receivables, our inventory, where the business is headed. So it would be actually a good 3-4 page document on the various businesses that we have. We have about 7-8 profit centers. We talk in depth about each of them. The banks are most open to come and talk to us at any time. We maintain the relationship all the time. What we also tried to do in the last 5-6 years, especially the debacle in 2009, is to strengthen our balance sheet to such an extent, debt covenants and all that, bust all the limits that the banks have set. So this is some of the things that we have done to keep the cost of borrowing low. And at the same time, our philosophy with the banks is we tell them that
have you ever used that? In case a particular profit center or particular business is not really doing well, do banks really still support? Do banks really still fund only for that, not looking into the larger, let's say, the group picture, I would say, but as an independent profit center or as an independent entity, where the potential may be there, but currently they are facing problems, they are into losses. Because what we have seen is many a times companies which actually have bad year, which actually have probably losses in a particular year, banks probably may pull back a little bit and be more cautious. So your views on that?
As long as the overall numbers at group level, except one of the banks, they're fine. That's why we try to be extremely open. We had a FMCG business, the distribution finance, that was not doing well. So we kept them regularly updated about the fact that this business, the business model is changing, and the kind of investments that are needed, and the kind of returns that's possible to be generated is not very lucrative, and we kept them on the loop for nearly about 2 years before we finally decided to exit that business. And we kept the banks completely informed about it. And I don't think the banks ever minded, except that they probably increased the frequency of the communication with us as to finding out what's happening. Beyond that, I don't think we saw any particular reason as to why the banks would want to reduce the limit. In fact, we go out of the way to start reducing the limits of the banks because we are able to utilize all the facilities. That's because we run or we try to maintain a very, very conservative style of never ever forgetting the fact that banks are willing to lend to companies who don't really need the money. So I think we try to come in that category.
Yeah, we'll just
Sorry, I just want to add to what Prakash said to your particular question. I think the perception is probably a little different because whenever I speak to, you talk to any head of corporate banking or SME banking here in UAE, no one wants to pull the plug or pull the carpet when they're going this down. It's, a bank has a representative called a relationship manager. That is a very, very old term. The person has built a relationship. If the banker has the trust and confidence in the business model, if you have been able to maintain that trust and confidence, I'm sure we have amongst the audience people who have seen the 2009 crisis, and the bankers have stayed with them. No one might have reported a very huge profit or for that matter. But it's the relationship banking which one needs to understand as a client and the banks as well. And there, of course, there have been various instances in the market about banks pulling the limits, but at the same time, we need to be very transparent and upfront about the business model that we have and how the situation is impacting us. Whether the falling commodity prices is impacting us, whether the receivables are impacting us. There is a natural slowdown in my payment cycle which is impacting. So it's purely going back to the basics. That's what I feel at least. You go back to the basics, go back to your relationship banking days with your banks, and be upfront and transparent. Just a year of loss or negative results is not going to scare anyone in the market. That's what I feel. But it's all about having that trust and confidence with each other to maintain and continue the relationship.
Just one last question before we open the floor for question and answer. In what extreme circumstance would actually bank really pull the plug and take a legal action? So what everyone is worried is that today banks have, let's say, checks or security checks have taken and then they put a check and then person is caught and put behind bars. Criminal action is initiated. So generally,
give you a very general answer. There are two types of loans here. One is the high cost, the amortizing term loan, various names, 17-18%. I think that's where it's a very EMI based. So one should be very, very conservative while taking that. So two reasons. One is it's very high cost debt. So if you don't really need it to